Today we're going to talk about the various types of assets and how they're searched, but more importantly, which ones are more likely to discover hidden assets. That's the most important thing for many clients. What assets are being concealed from me? You probably wouldn't be looking to find assets if some of them weren't hidden, or maybe you suspect that they're hidden. Some types of assets are more likely to be hidden than others. Now, that doesn't mean they're easier to hide. It just means that this is the way that many fraudsters or scammers try to hide assets, and we'll talk about those. We're going to talk about the 14 different types of assets. Each one is a different type of search. There's not one button you push and all the assets pop up on the screen. Every type of asset has a different mechanism of being recorded and a different method of attempting a search. The most common reasons for doing an asset search are usually something like there's a court judgment against a person, you have a judgment, and you want to make sure the person has assets to satisfy that judgment or to find out where they are so you can garnish them or seize those assets or recover your debt. Many times it's a family law case where there's a divorce and both parties are trying to split up marital assets, and one party might be concealing some of those assets. And we'll talk about where those are more likely to be concealed. Another type of case is probate fraud, where when there's a deceased person in a family, sometimes certain family members will go out of their way to try to take some of the assets and maybe secrete them so that other people don't get their hands on them and they can keep the asset for themselves. So let's first talk about the different asset classes. There's 14 types of assets. Each one of them has pros and cons for how you search them. We'll also talk about certain asset classes that many people overlook and they don't want to search because they don't think there's going to be a lot of money there. But in many cases, those are the asset classes that return the highest amount of recovery for a client. So the asset classes, so we'll go through all of them, are real estate, vehicles, bank accounts, corporate assets, intellectual property, that's a big one, revenue streams, insurance proceeds is another asset class that a lot of times is overlooked. Prepaid taxes, a lot of times people prepay their taxes, we'll talk about that too. Intangible property, that's another one that sometimes people aren't familiar with. UCCs and accounts receivable is another asset class. Personal property, and last but not least, constructive trust. And constructive trust is probably the most valuable type of asset to look for when somebody is actively concealing assets. So we'll go through them in order. The first one is real estate, very familiar with that. Most people are. You have a house, you have a piece of land, you have a building that is owned. The ownership of that asset is evidenced by a deed. A deed is a document that is signed at the time of transfer, transferring it from one person to another. The seller is called the grantor, the buyer is called a grantee. The deed signs it over to the buyer. Now that deed is recorded. That's the important thing about real estate records. Real estate records are good because they're public records, public documents. In most jurisdictions, it's done at the county level. There's a county recorder that keeps all these documents on file. The problem is searching them is not as simple as just putting in an address and it pops up on a screen. Land records, property records are indexed by name, which for an asset search helps you because you can just search for a name and find all the properties or deeds in that name. The problem is deeds are not extinguished when they're transferred to somebody else. So if you search for, let's say, Joe Smith, it'll show all the deeds where he bought a property, sold a property, used to own a property, had a mortgage. So you first have to get all the documents with that person's name on it because the index search for that name, all it's going to show you is every document with that person's name on it. Then you have to look at each document to see, is this one where they got property in their name? Did they sell it? Did they get a mortgage? Did they pay off a mortgage, right? It's also important to look at properties that were transferred away. This is where hidden assets come in. If you see a property that was recently transferred away to another person, even though you might say, well, they don't own that asset anymore, don't overlook it. take a closer inspection of that transaction. Was it a quitclaim deed where there was no money changing hands? You just gave it away to somebody. Were any of the parties that were sold to a relative or an associate or a colleague? Also look to see, is that property, was it for sale? Was it on MLS? Was it on Realtor.com, one of the websites that show properties? Because if it wasn't, that means how did it get sold if it wasn't advertised? Maybe it was a fraudulent conveyance. Remember, we're not attorneys. We're not giving you legal advice, but we can tell you the things that we see in doing asset searches, mostly for attorneys. A lot of the searches we do are for attorneys. And fraudulent conveyance is something where if somebody owes money on a debt, or they're in a marriage, or they're in a probate, they're not supposed to be transferring assets away. So that's what's called a fraudulent conveyance. So you want to look at all the transfers. You also want to look at mortgages. Was there a mortgage recently paid off? Because if there was, that might indicate assets being used to benefit and enrich that person. The next asset class is vehicles, and these are titled vehicles. Now, those are evidenced by a title. Vehicle title is a legal document. It's a government form issued by, in most states, an organization or a government agency called Department of Motor Vehicles or Department of Transportation. Every state has a different name for that agency, but a vehicle title is a government document. You can't print one from the internet. You can't buy one from a company. It's a government record of who owns a vehicle. So you want to look to see what vehicles are owned by that person according to the government records. And you can do an inquiry called a DPPA inquiry to get lists of vehicles that are owned or maybe even formerly owned by that person or co-owned. So that way you'll know, are they trying to do any funny business and taking an expensive car and putting it in their cousin's name? That's a hidden asset. The next asset class, this is number 3, is the one that most people want to gravitate to instantly. It's called bank accounts. You want to search for people's bank account to see how much money they have in the bank. Now, unlike real estate and vehicles, bank account records are considered to be private records. You can't just, pull up someone's bank account, just like you wouldn't want somebody pulling up your bank account. But there are methods where bank account records are searched legally. There's a federal law called the Gramm-Leach-Bliley Act, GLB it stands for. That is a federal law that prohibits using illegal methods of obtaining bank account records. And that's a very serious law. You want to make sure if you're accessing any kind of records, not just bank account, any other type of assets or even personal information, that you're not breaking the GLB law, because first of all, you won't be able to use the records, and second of all, you can get in trouble if you use the wrong method or technique of getting assets or bank accounts. So bank accounts can be searched a number of different ways. There's many locations where banking records are outside of the banking system in the private record system. It could be OSINT, which is open source intelligence. It could be direct deposit records. It could be used for other things. In many cases, bank account records are discovered within other types of asset classes. For example, in real estate records, you might find a record of a wire transfer to buy real estate. You might find a record of somebody using a bank account to pay for their HOA fees or insurance payments or their car payments. So many times banking records are found that way. There's also the SWIFT code system, which generates a private code for every banking transaction. There's also the account verification system where private companies will verify people's banking records, and that's outside of the financial institution, so they may be searchable. So bank account is the third type of asset, and it's the one that most clients think of first when they're looking for assets. However, it may not be the one that's most productive. Sure, sometimes you can run a bank account search, find $1 million, pay off your judgment, and you'll be good to go. But many times when somebody owes money or they're trying to hide assets, they're not going to leave money just dangling in a bank account, right? And you might say, what about a hidden bank account? Well, every bank account is hidden from the public. Your bank account is hidden. Like you don't walk down the street and nobody can say, I want to look up your bank account, right? An asset search for bank account is going to find every account, not just the ones that you know about. The fourth type of asset class is corporate assets. Does the person have any interest in corporations? It doesn't have to be a big corporation. It could be Joe's Landscaping. And we'll talk about an example where that exact type of company, a landscaping company, resulted in a $92,000 recovery for a creditor. Somebody we did an asset search for, and they had a $92,000 recovery from a very small mom and pop landscape company because they had business assets. There may be equipment, there may be LLCs, there may be private company ownership, shares in a private company. Corporate assets are important to look at. Number 5 is intellectual property. Now this one a lot of times gets people a little bit crazy. Intellectual property are things like patents and trademarks, and you might think, well, or copyrights. You know, this guy that owes me money, he doesn't have any patents. He doesn't have any trademarks. Well, if the person, he may not, but if the person is at all involved with any kind of enterprise or business, even a side hustle, they have some intellectual property that you want to know about in terms of web assets. And web assets, everybody has one. If you're online, you have a email address, Facebook page, you might have a website, you might have a PayPal account. Those types of intellectual properties many times can yield fruit for getting payment on a debt. Here's why. Look, let's talk about Joe's Landscaping. This was a case where the person owed $100,000 to our client, and they were claiming all up and down, I don't have the money. They lost in court. They had a judgment. The judge ruled, you owe the money, you have to pay it. They swore up and down they had no money. Well, their bank accounts showed little money, a few $1,000s. They rented a house, so no real estate. They had a couple older trucks, not worth a lot of money. But they had a website. And you might say, well, website's worth nothing. You can register a website at GoDaddy for $10. That's true. But this website for this Joe's Landscaping is where people paid all their fees for the services that provided. It had their phone number, had their email, had all of their advertising. It had been around for 10 years. So the client, our client, the creditor, claimed that as an asset, filed a garnishment of that website with the registrar, which happened to be GoDaddy. Now they own the website, and they went to the debtor and said, look, we own your website. I could shut it down tomorrow. I could send all the leads, because they got 30, 40 leads a day from this website. I can send them all to your competitor and they'll pay me some money. I also now own your phone number because it's associated with the website. You're not going to get any phone calls. So the creditor couldn't do anything directly with the website, but by taking control of it, they forced a settlement because that person was making $18,000 to $20,000 a month from that website. So they didn't want to lose that. So they entered into a settlement for $92,000, half paid immediately, and then another $10,000 a month for the next 4.5 months, and the guy got his money. So don't overlook those smaller types of assets because, look, it's easy to find the elephant in the room that's a big obvious asset, but many times you'll get your money by needle in a haystack, uncovering these smaller assets. The next type of asset is revenue streams. Many times a person doesn't have, and this is number 6, I believe, doesn't have actual cash laying around, but they have money coming in every month. They may have an annuity payment. They may have business income. They may have a contract. Any of those revenue streams can be garnished for recovery of your funds. And sometimes you can actually take control of them as a factor, and now the money comes to you and you dole it out to the other person. That's, again, a legal question you want to get good legal advice on, but the important thing is you want to discover these revenue streams so you know where the money's coming from. Even if there's not $1 million laying around in a bank account, if you see activity where there's a lot of money coming in, that revenue stream can be worth money. The next one is insurance proceeds. Look, if a person has a benefit from an insurance policy, that's an asset. And that asset can be garnished. It can be assigned to another person if the court approves it. And you don't want to let somebody get off the hook because they don't have any money, but they have some very, very lucrative insurance settlements or insurance claims or insurance policies. Here's the next one. This is number 7. This is something that you do not want to make invisible, and it's called prepaid taxes. Many times when a person is aware that their assets may be scrutinized or seized or claimed, they will make some huge prepayments to the IRS. Most people don't want to pay the IRS. They want to, put it off as long as possible. But hear me out. If you're somebody who has some wealth, some assets, some means, and you know someone's looking for it, what would happen if you wrote a check to $100,000 to the IRS for your tax account with your tax ID, your social security number on it, to prepay taxes, right? You don't owe $100,000, but you're just paying it out of the blue. Well, what happens is that money goes into your account. It sits there. It's like a bank account with the IRS. They hold it. When you do your next tax return, you can use it as a refund. If you don't use it all, it stays there with the IRS, and you can tap into it as much as you want. When the coast is clear and the dust settles, you can tell the IRS, call them up, hey, I want my refund, and they'll send you a refund check for whatever's left in there. So that's a way that many people, especially in divorce cases, are looking to hide assets, and you want to know about that. You want to know what assets are being held by any third party, much less the government. The next one is intangible properties. These are things like credits that you might have similar to the IRS, but a refund credit from a business, or maybe you have an award coming to you. A lot of times people will put money into casino accounts, like for poker chips, virtual chips. Those are intangible properties. And people have been known to do that. They'll go to the casino with $20,000. They'll buy 20,000 in chips. They'll maybe play $500 or $600 at the blackjack table and walk out the door with chips. Or they'll put it back in their account and they can retrieve it later. Those types of intangible properties can take a number of different forms. PayPal's another example of that. Even some online platforms you can leave money in. Digital currency, Bitcoin's an example of intangible property. And you don't want to overlook that, because those are assets that are just as real in terms of becoming actualized for the creditor. The next one is similar, but we categorize it as a different class than intangible, is UCCs and accounts receivable. If a person is at all in any business enterprise, you can have accounts receivable from companies you've done business with that haven't paid you yet. Maybe if you're a service person, like an attorney, you might do work and then your client sends you payment when you send them an invoice, you send them a bill, maybe net 30, net 60. You can also have UCCs where you're lending money or crediting other vendors or clients with work or with inventory, and then you get paid later. So UCCs and accounts receivable usually only apply if the person is in any kind of enterprise or any kind of business, but they've been known to do it even as an employee. We had a case where a person was a contract salesperson for an air conditioning company, commercial, air conditioning company. And they got paid commissions, $7,000, $8,000 a month. And what they did was they told their employer to not pay them their commissions, to just put it into a UCC. So that way it's documented that they had it come to them, but they didn't want the money right away. And then once the divorce case was over in 6 months, they were going to take that money out, but we found it so that way it wasn't hidden in the UCC. Second to last one is personal property, and that is things like jet skis, boats, maybe computers or high-end gear. It may be vehicles, but not titleable vehicles. These are vehicles that don't get a title, like some ATV or a tractor, right? Those are more, they can be worth money, but they're not quite as expensive as things like a vehicle or a larger vessel. But you don't want to overlook that either, because sometimes those things have a sentimental value. It can be used for negotiation of a settlement. Here's the last one. The last one is the type of asset that almost is always used for concealment, and that is a constructive trust. What is a constructive trust? Remember, we're not attorneys, not giving you legal advice, but this is what we see a lot in cases that we do for attorneys. Let's say if you have a piece of property, a piece of land that you own free and clear, and somebody's coming after your assets and you want to hide it. What you do is you transfer that asset into your cousin's name or your friend's name, Joe Schmo. Not in your name anymore. Technically, they own it. But if really they didn't pay any money for it, they didn't give any what's called consideration for it, and they're just holding it for your benefit, that's just like a trustee holding things in a trust. Even if you didn't intentionally or formally create a trust document or a trust entity, if you put in somebody else's name but really you own it, that's a trust. And it's called a constructive trust, meaning that formally it's not a trust, but for all intents and purposes, it's a trust. So same thing can happen with bank accounts, with vehicles. Put your expensive car in your grandmother's name so that way it's not in your name. That's a constructive trust. How do you discover those? The thing that happens with those is that trustee or that person holding it in their name, they're doing you a favor, but they're not going to pay your bill. So the property taxes, the insurance, HOA fees for real estate, any expenses that are associated with that asset, the trustee is not going to be paying. So if you see a piece of real estate in somebody's name, but your debtor subject is paying the bills for it, that indicates a constructive trust. So you always want to look at those to make sure that you're not being fooled or scammed by somebody trying to hide assets in another person's name. In addition to getting that asset back, you can also make a claim for what's called third-party liability, meaning that that third party, if they knew that what they were doing was a scam or trying to help them hide money, they may have some liability. They may have insurance policies or other funds that might credit your recovery. If your debtor doesn't have all the money, you may be able to collect from the third-party trustee. That happens quite a bit, especially in Ponzi scheme fraud cases like the Bernie Madoff case. There were tons and tons of people who were third parties that didn't really steal money, but they were holding on to money or they participated in the fraud. Anybody who extends a fraud, makes it bigger, allows it to happen, or makes it easier for the scammer can sometimes be dragged into it as a constructive trustee or a liable third party. Hope that answers your questions about assets. If you have any questions, you can email us at our website below, activeintel.com. You'll see options there for purchasing asset searches, for doing consultations with an investigator about your case or doing an asset search, and even some instructions on how to do some of this searching yourself. Because technically, all these searches, they can be done by anybody, right? Investigators do it a lot because we have the techniques, we have the technology, and sometimes people also don't want to spend the time. A typical asset search takes 16 to 17 man-hours of labor to do, plus all the fees to get these records. Some people don't want to just put that money or that time in themselves. They just want to pay somebody to do it. We're glad to help you either way. If you want to do it yourself, we can give you some instruction. If you want to have us do it, we're glad to help. More importantly, if you would like to consult specifically about your case, click the link below. You'll see an option for a consultation with a licensed investigator, live video call that'll go through your case and give you answers that might be of assistance to you. Make sure you like the video, forward it to your friends, follow the channel, and we'll see you on the next video.